Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream where I am going to be starting the Fibonacci series today. I know for a fact everybody's going to be very looking forward to this one, as am I. I am actually really happy to be teaching you all my the way I use Fibonacci over the next. This is going to be, I imagine, a month or so, because it's not something you can fit into one lesson, you know. So over the next few weeks, I imagine anywhere between 4 to 6 weeks, I would say, we're going to be going over Fibonacci, you know, everything that I personally use myself in terms of fibs. So starting tonight, it's going to like go in a what I would call like a chronological order, you know, starting with more of the core Fibonacci. Okay, so starting with the retracement, okay, the core of it, and then advancing until we get to the most advanced sort of Fibonacci tools. Okay, so that's my plan. Of how I'm going to do it. So I hope that you thoroughly enjoy this. Not only enjoy, but also learn a lot from this, because as you know, you must know, you're in the group, that, you know, I trade Fibonacci a lot. Okay, a lot. I trade off of Fibonacci. Not exclusively. It's not that I use Fibonacci alone, which I do not recommend, but it's always on my charts. It's always something I'm paying attention to. So I made being frank, I've made a lot of money through Fibonacci. So it's a tool that you have to learn. You just have to learn if you're under my mentorship. So tonight we're going to be beginning that journey. So yeah, there's a lot to look forward to. So yeah, no, hype yourself up. This is going to be a good one. So yeah, Fibonacci. Starting with ontology chart of the week. I specifically chose ontology chart of the week because it was related to fibs. Okay, the entry was related you know, one of my most favorite setups, which is a weekly confluence with weekly confluence with the CC, which you'll learn tonight is the Champions channel. But yeah, this confluence that you see is a real high percentage winning trade. So it's a really nice trade to take. That's why I wanted to pick it for tonight, and thankfully, I guess, it's traded out well. Because if it didn't have worked, you know, I'd have started this stream in well, here's a bad example, but you know, thankfully it traded out very nicely. So there's that to look forward to as well, that I'm going to be starting with here. Let me just make sure everybody can hear me. Oh yeah, like, to be honest, like, this beard is not even that I like the beard, but I'm just too lazy. Or I'll just say I'm too busy. Too busy to shave. But no, I don't really like it that much. But never mind. Moving on. Yeah, so yeah, let's begin with ontology, okay? So yeah, I'm going to be explaining as we go on this evening, like why, for example, the fib was pulled from here, okay? You're going to be learning to look for fib confluence after this evening. But what we can see here, fibs from where the move got impulsive, okay? So Fibonacci from where the move got impulsive, you can see the drop here. So from the low to the high, okay? So I'll load up the real chart in a second, like the chart. But this was basically the setup that I posted 28th. We're now on the 2 days ago. So since these 2 days, it's dropped down into entry. So, you know, you had to be patient here. I had to have the patience to wait for this. Naturally, you would expect a rise. And the rise we have definitely got, okay, into around this SR level. Of 1,000 psychological, with which we're rejected from. But yeah, coming down into this you know, 618 to 66 region, okay, which is also confluence with the a weekly level, okay. So that was the setup. It was a long. And I read through the entries. I saw the entries that people posted, obviously in the group, and pretty much the majority of you all had this setup of waiting for the 618 as well, which is really nice to see. So I can just remember offhand Bass, I want to say, if I'm saying that right, I remember just his this morning that I read it, and he literally had the exact same setup. So that's really good to see, the weekly and the 618, and seeing that he had the exact same setup that I had here. It's a sign that people are clearly learning and, you know, highlighting the correct levels and then using the correct fibs. It's just really nice to see already that, you know, some have learned that, and if you haven't learned that, then, well, that's what tonight's for, isn't it? But yeah, really nice to see that members also identified the same setup that I identified, because it ended very profitably. So basically, yeah, so what we can see here, just fully explain this. So the long entry from the 6-6 and weekly confluence. After such a move, to be honest, had very high confidence in a bounce. I'm going to like give you some extra insights of why I expected this bounce, okay? But I might as well mention it now. If you look to altcoins that pump, the best example that I can think of right now is Icon, okay? Think back to Icon. I'll load up the chart if I have time at the end of the stream. But think back to Icon. Icon pumped earlier, about a month and a half ago. Okay, Icon pumped, had a very, very big pump. Come back to the 618, had a secondary pump. You look at WAN, okay, the same. Pump, come back to the 618 secondary pump. You know, load up a random altcoin and you'll see the same pattern. Okay, they pump, they get down to the 618, they have a secondary pump, and ultimately they give it all back. So it's not something you ever want to long-term buy in after a massive pump like Ontology, in my opinion. But you know, you get the reactions here, but you generally don't expect a massive pump to come down to here and it for to continue pumping up again. It's generally something along this sort of lines, down to here, secondary pump, and it ultimately ends back down at the lows. I'm not saying that's what's happening on Ontology, but that's generally what you will see. Okay, just look at any altcoin and you'll see that is the case. But so this is the Ontology chart. Let me go through this one in detail because I actually think it was really, really nice, if I'm honest with you. So we zoom out here, and you know, this is obviously a channel. This is a channel that I've had for a very, very long time. You know, we've been trading this channel in the group what must have been a month or two, to be honest. Obviously, where it was just range bound from high to low, so deviations from the high and deviations from the low, which we all know are acceptable. Ultimately, on this one was pretty funny. Obviously, you got a spring, so if you are into like Wyckoff, I hope I'm pronouncing that correctly, but obviously this is some sort of spring or swing failure pattern. Very simply, you take the lows, close back above it. You know, you have to be looking at that bullishly. That's the lows taken out of I want to say it was like a 77-day consolidation range. Yeah, about 77 days we were inside this consolidation, so 77 days worth of potential stops taken out, and as soon as you see the rise back above, okay, there's your swing failure pattern, isn't it? Take, you know, liquidity grab, everybody stopped out, okay, close back above, especially when you start getting back inside the channel. That has to be looked at a deviation. Even if you're not trading swing failure patterns, you don't know what they are, you know, simply the channel itself. You come back out of the channel, you know, you come outside of the channel, you close back in, you back test. That's a long, isn't it? Just like here, for example, you come back in, you back test, you long it. Okay, the same here. You come outside, you come back in, you short it down to the bottom. So we've done parallel channels. It was there, to be honest. So there you come in, you back test it, you move up. What was really nice on this one as well, obviously here on this one, you had originally obviously coming in a little bit of a back test, high, low, higher, low, low, high, higher, low, higher high, higher low, higher high, higher low, higher high, higher low. But I wanted to just highlight this, that you did move outside of the channel, you did get rejected at the weekly, you did come back down. So just so you can see, you know, the importance of this weekly, it did act as a rejection before you come back tested that channel. So there's your bullish break of the channel, the back test, and then obviously you got the rise, the continuation in the end to the upside here. But yeah, after seeing that sort of rise, you're seeing the rejection, then you see a lower high, and you know, you move down here for the lower low. But look where it come to. Okay, so look where it come to, and now let's move on to the Fibonacci side of things, which I think is really brilliant. Okay, what do I think most people are going to do their fibs? Okay, so I think the most standard fib pool here, I'm just going to come out of Discord. If we take a Fibonacci from the very low of the move, okay, from the very low of the move to the high, you can see anybody waiting with only the fibs from low to high, if they were waiting for this golden pocket, would have missed out on this secondary pump. It's only 13%, but, well, I'd say only 13%. That's massive, to be honest. But, you know, if you only done this fib pool, you would have missed out on this move. But you can also see that had no confluence. So it would have been a little bit of, there would be no reason to buy this, in my opinion, because you've got no confluence on that move. Okay, you don't want to do that. But you see here, as I will explain in slides later to come, you don't do just one fib pool on its own. So you don't just go from low to high. Okay, so add in some more fibs here. Okay, so what you can say here, okay, if we drop down to a little 15 minutes. So where did the move get impulsive? Is this impulsive behavior here for you? In your opinion, think, is this impulsive? Okay, is this sideways movement in the upward sloping channel impulsive? Or did it start getting impulsive from that low and shooting up like this? You know, is that impulsive from this low to the high 66% in a few hours? That's clearly impulsive, isn't it? So the move got impulsive after you got that low. So after that low, you just shoot straight up. So you take a fib from where it got impulsive to the high. Okay, hope that makes sense. And if you want to also, which I found pretty lovely, that if you take a fib from this from this low to this high, okay, you might say, oh, why this low? Because if this was all part of the same structure, okay, so if this is all part of the same structure, well, then you can also see the Fibonacci confluence that you had in that. But that wasn't a pool that I had. I think it's much better to take from where it got impulsive to the high. Okay, and then what's the confluence, you might say? Well, the confluence is obviously the 6-6 there with the weekly. So you see literally one sat, two sats different from the 6-6 to the weekly, and the weekly held it from the absolute sat, by the way. So the absolute sat was the weekly holding it there. So I think that's in itself perfect. But yeah, then it's the confluence that you had in this region. Okay, with the weekly, you should be looking, in my opinion, well, how I traded it, you would be looking for longs at this place. Okay, you definitely had time. You definitely held a little consolidation in here. Okay, you held that little bit of consolidation. Okay, and before you form your low, high, lower high, and then ultimately breaking up again. And this, for me, was happening while I was asleep. But now I want to explain the take profits. So the same reason of take profits. Where are you going to be looking for take profits? What do you think? So where are you taking your fibs from? Okay, so here, the move clearly got impulsive to the downside, didn't it? So from here, you get a very big drop to the downside. So you're going to take a fib from, let me just delete here, fib from this high down to the low that you're at the moment. Okay, so from the high to the low. If you're doing fib pulls, you could have a fib pull from here to the low, and here to the low, and here to the low, and here to the low, for example. The low is always the same. It's just you're pulling from different highs. Okay, so that's important to be aware of as well, by the way. You're pulling from different highs, but always to the same low here. The same of when we were pulling from low to high. We're pulling from different lows, but still the same high point when but yeah, here we're pulling from this high where it got impulsive to the downside to the low, and another fib pull that I have here, which is for the 382. Okay, is from the overall high down to the low. Okay, so where's the fib confluence here? From the high, overall high to the low, and the high where it got impulsive to the low. Well, look what you had here. Okay, if I zoom in really closely, 382 sat on the 6-6, so that's Fibonacci confluence, as you'll learn about tonight. But that's fib confluence, where the two fibs line up exactly like this, and I would call this exactly. You have the 6-6 on the exact 1000. The 382 on one sat higher, 1001, and a psychological number that is 1000. These psychological numbers generally are going to have effects on the market. Okay, so you can see here that's your Fibonacci confluence, and then the psychological adds into this. Okay, and you do actually go from weekly up to that fib confluence, which also takes out an old high, before dropping down. Look where you drop down to, and I'm in a long on this still, by the way. Which is pretty nice. But then where are we pulling this fib from? So this fib that I've got here, okay, from the low to the high, you're coming down again to the 6-6. So you're holding the 6-6 once, bounce, where you get rejected from the 0.5, to the 6-6, bounce. And now I would love this to continue up, okay? But yeah, so I'm still in this. And I also wrote about this here. So this was early this morning, where I've not got the fibs labeled here, but we were coming up and we hit the high, hit my take profit. Okay, and basically small day trade long from another 618 retracement. So then this was obviously the fib pull from the low to the high, as loaded up on this chart now, from the low to the high, coming down to the 618. Obviously, I did have a trend line in here as well. Where was this trend line that I was looking at? It was along this trend line. Okay, and as wrote in the group, you need to wait for this trend line to break if you want to be conservative. And clearly, the trend line has broken, and you're getting a rise. Okay, so since even that trend line break, that's 2%. But yeah, that's obviously pretty nice in terms of Fibonacci, like really just Fibonacci on its own. Managing to essentially get this low in confluence with the weekly, and then this one just from the low to the high of this move, getting in on a golden pocket here. Okay, so what could you use for Fibonacci confluence? Well, from where it got impulsive to the high, which is obviously, you see, just so you can see the difference, this pull here, you in the end, you wouldn't have got stopped out in my opinion, but obviously the pull is slightly higher. Okay, so that's 933, the 618 here 930. So if you had done two fib pulls here, you can see that the difference is relatively small, but that's because this low to this low is really close together. So you got about 3 sats difference, but nevertheless, you would have still been in a profitable trade if you had bought slightly higher, because your stops, as I'm going to be explaining today, you don't use Fibonacci for stops. So whether you had bought 940 or whether you had bought 924 and got the very low here, your stops are not going to be placed off of Fibonacci levels. Okay, so I guess under just a random example here, like if you want to use an order block, well, there's a 5-minute order block. For example, you can use that for your stop. So stop below that 5-minute order block, and you can see, whether you bought here or here, stop's not being hit. So you use market structure for fib, you use market structure for stop losses. You don't arbitrarily use, oh, I'm going to place my stop one sat below the 6.6, or I'm going to place my stop loss one sat below the 7.86. It shouldn't be how you use stop losses, in my opinion. But yeah, that's ontology. Ultimately, I was aiming for 10.64 sats, so I was aiming ultimately for this high up here, which is 10.64, but I've already taken 60% profits at this high, so if we do just fall over now, I won't really be bothered. But I've locked out the majority of this long, but if we do continue back up to if this does get follow through again from this pullback, I'm looking up for 10.64. Okay, that's my overall target. If we manage to close above that daily, which is just above my target, if we close above the daily and hold it, well, then I could start giving this more belief or more confidence that this could defy the odds of what alts do and move up for new highs. But generally, they don't do this. Generally speaking, the alt will get a pump and then it will come up, and ultimately come down to where the impulse started. Okay, and I could give you so many examples. Just look at another one I would say off the top of my head. I'll load it up really quickly. ENGBTC. I'll just load this up for the example of what I think alts generally do. Okay, so you see this massive pump. This one didn't even get a secondary bounce, but this one, massive pump and dump. I guess I'll show you the one which got the bounce off the 618, which was Icon. Icon. Okay, so Icon here obviously got that massive pump, come down to the 618 or the around the 66, and got a secondary move up. Okay, which is still about was about 13%, I want to say, pump. Okay, and then ultimately come down to where the impulse started. So this is why you don't generally look to get too aggressive for long-term sort of buys after massive pumps, because they generally retrace everything. Okay, another example that I can think of is VET. Look at VET, where that had that really big pump. So that was a really big pump that ultimately gave everything back. So you just want to be a little bit careful on alts, in my opinion, after they pump. But enough of that. So yeah, that was ontology, chosen really from essentially just because it was from a nice fib, and I saw the potential. Oh, sorry, I saw the potential in that of this playing out, and nicely it did play out. So that was ontology chart of the week. Your volume is low. I have no idea why. I'm really sorry if the volume's low, but there's nothing I can actually do. I guess I'll try and speak more directly into the microphone. I know if I'm looking away, like now, the volume is going to be really low, but I need to concentrate on, I guess, speaking into this. Cool. So that's ontology chart of the week done. I'm just going to take a real quick drink and then we'll begin with fibs. Ooh. Cool. Right, so let's begin with fibs. Obviously really exciting. So Fibonacci retracement. This is like a really core tool, what I would say, of being a good trader. I obviously you can trade with not using Fibonacci at all. It's not a requirement to trade well, but for me it is. But it's not a requirement to every trader that you have to include fibs. But yeah, that's what I would encourage everybody with me here to really integrate this into something that you're using daily. Hopefully on most, if not every move that you trade, you should always have a Fibonacci on your chart. Okay, so the Fibonacci retracement. Okay, so the Fibonacci retracement tool is one of my primary tools in trading. You will always see it on my charts, and it is a must on every trade you take. Must, obviously, if you don't want to, you don't have to apply it, but in my opinion, it's a must. It is a leading indicator. Okay, so we can predict future price levels, where it is likely to go, and also to reverse. So if you're in the champions group and you're following me day trading today, for example, today I was posting charts with the 618 on, saying, well, likely to go here, just posting the chart with a fib, and we were seeing price rise up to it exactly, getting the rejection and coming back down to the next fib. So this is definitely a leading indicator. You can literally predict, and it looks quite good when you do it. But that's not generally how you should trade, but it looks really nice. This today, I guess, where I was posting these charts, it was coming up to that 618, it was getting the reaction, it was coming down to the next 618, it was getting the reaction. We were range bound between 618s. It was absolutely brilliant, to be honest. But yeah, it is a leading indicator where you can essentially try and predict where price is going to go and where price is going to reverse. It's really powerful in that regards. Okay, real big sort of disclaimer when you're using it though, so you don't really want to be using it alone. Okay, so Fibonacci is a powerful tool, but it is not a good decision to trade from it with no confluence. That is basically a gamble. So for instance, if you just load up a chart and you put a fib on and you see the 618 and you buy it, well, that's not a good decision, because you do want to be using it in confluence with something else. You know, for example, a horizontal, you know, a pitchfork, okay, Elliott waves, you know, just another tool in general, okay, another technical analysis tool. So it's just a case of, it's not just going to be easy. If you just put on a chart and you load up a fib and you trade from the fib, you're probably not going to win, because it doesn't work like that. You have to use it in confluence with something else, okay? This could be an exponential moving average, okay? You just want to use it at least with one other tool. If you start seeing 2, 3, 4, 5 tools, for example, lining up together, well, then you can have much more confidence. But if you just see one on its own, period, anything, one on its own is not enough. You have to see multiple variables. So that's very important for me. Please do not just start using this on its own, because you will lose money, okay? So tonight I will be covering the core function of the Fibonacci retracement. It's needed I cover it tonight as I move through the Fibonacci tools in a sensible order. And, you know, from tonight, some people are going to already know what I'll teach tonight, possibly. But it doesn't make sense for me to start going into advanced fibs when some people are going to want, you know, don't know how to use fibs, period. So I need to start through this chronological order of more basic going to more advanced, not starting at advanced and going to basic, you know. But I really do believe that tonight everybody should learn something from. Even if you feel you're a really, really, really good Fibonacci trader, I still believe you can learn something tonight. So there's that as well. So I just wanted to note as well, I do not place stop losses using Fibonacci. That requires market structure. Something as simple as a higher high, higher low. Place your stop losses below higher lows. I just would use stop losses more towards that rather than fibs on their own. So Fibonacci is not used for stop loss placement for me anyway. Okay. I just wanted to say that before we begin. So Fibonacci retracement. Okay, so firstly, what is the Fibonacci retracement? I hope most of you already know these sort of things, but Fibonacci retracement, essentially, it's, you know, you get a price swing up, and the 5.0 is a 50% retracement of that impulse. So you get an impulse, then you load up your fibs from the low to high, say. Okay, and the 382 is a 38% retracement. You know, your 0.5 fib is your 50% retracement. Okay, so these are essentially percentages of the retracement of that impulse. Okay, so your most important ones are going to be 382, they're going to be the 0.5, and they're going to be the 0.618. They're generally the three biggest fib levels to be aware of, because you'll see them with the biggest reactions. Obviously, they've all got their time and place. You know, they've all got their importance individually, but generally those three are going to be the most important. Okay, so one thing that I wanted to start off with tonight is because I see people using this incorrectly in the group as well occasionally. It's just, I've seen it so much. You have to know, when taking fibs, when taking Fibonacci, please always make sure you take from left to right, okay? So if you're going for resistances, this is a Bitcoin here, for example. So if you're looking for a resistance, you'll take from the high on the left to the low on the right. And as price rises up, each of the fib numbers you will expect to have a resistance, okay? So you can see here on Bitcoin, for example, taking a fib from the low, taking a fib from the high on the left to the low on the right, price come up and it hit the 618 exactly, and obviously got resistance. And then to find support, you're going from the left of the low to the high on the right, and as it comes down, you're expecting these fib numbers to be support. And as we all know, didn't quite reach the 618 here before it got a massive impulse, but clearly was influencing the market. One could say it's a front run. In my opinion, it was support coming in from the lows, the liquidity. But naturally, the fib numbers are, just firstly, I want to just start off making it very clear. Never start taking your fibs from right to left. It just not how you use fibs, and I do see people using that incorrectly. Maybe some other random person has taught you to use it this way, and in my opinion, it is 100% incorrect. I would never ever pull a fib from right to left, and honestly, I believe that's incorrect. So follow me, I would say, if you're here. So yeah, never be pulling your fibs from right to left. Always from left to right, and be that a high to a low, okay, or a low to the high, you have to be going from left to right, always with the fib pulls, okay? So resistance would be from the high to the low. So let's just load this up so I can just show you actually what I mean here. Okay, so, well, let's just use this chart that we got right now. So if we're looking for resistance right now on the chart, okay, we'll go from the high, let's just say, keep it simple for now, the overall high, okay, of this down to the low. What are we expecting here? That each of these Fibonacci numbers will be resistance on the way back up. Okay, so there'll be resistance on the way back up. So the 236, the 382, the 0.5, the 618, the 786, the 886. Okay, when we're pulling from high of the left to low down here on the right, each of these fibs we would expect to be resistance on the way back up. Remember, we're not using them arbitrarily on their own. So we're not just going to say, well, there's the 236, let's enter a short, or here's the 382, let's enter a short. There has to be confluence. There has to be confluence with another factor. Okay, so we're not just taking them out like this and saying, well, let's enter a short there. It's not, it might work once or twice, but consistently you can't expect to make money doing that. Okay. But that's how you do fib resistance, from the high to the low. So then on the same way, if we're looking for support of this move, if we want to get in on a retracement, okay, we're going from the low of the move down here up to the high, which let's just say the high currently, okay, which is, I'll actually use this as an example. So let's ignore this that's going on here. If we wanted to buy on this retracement, then we could have gone from low to high and bought in on a retracement here. If it's just because this is moving up, so it's quite hard. But if we were to, expect a retracement here, then we could say fib taken from low to high. We could be looking to buy on these Fibonacci retracements, but always from left to right. Okay, so always from left to right. When you're going from low to high, you're looking for support on the way down. So these numbers should be support where you would look to buy. Okay, and the flip side, if you're looking for resistance, well, it was from high to low. And well, you can see here that you did actually hit the 3-2. You got a little bit of a pullback, but it doesn't look like it's holding up at the moment, does it? But that's another, when you're looking for resistance, you're going from high down to low. Okay, and then that's your, you expect a resistance 382, 382, 236, 0.5, 6, etc. That's how you do your fib pulls. Okay, so this is actually breaking up really nicely. While I mentioned this, that this was the parallel, well, this was the channel. Looks like we've actually broken out of this channel and moving up nicely here. So that's very nice indeed. But I don't want to get distracted by commentating on this right now. But that's nice. So yeah, that's basically fibs on. So I'll read this out just to make it very clear. I won't cut anything short, but I want to be very concise. So Fibonacci taken from the high in December 2017, okay, down to the low in December 2018, okay. As you come back up, those fibs that are going to be there will be at your resistance points, okay? As you can see, you top out in the CC. So that's the region between the 618 and the 66. That's where the move topped out, okay? And you pull back. And then a Fibonacci taken from the low in December 2018, okay, up to the high in June 2019. On the way back down, you can see here, 382, bit of support, 0.5, you didn't actually find support here. Okay, just 618 front run. So, the levels are not perfection, but then this is the thing. This isn't got confluence with anything, okay? This was no confluence on the way down, so these fibs were, I would call, arbitrary fibs. You can have them on your chart, but if they don't line up with anything, well, it's not going to work, is it? I'll show you now, just so I'll show you the confluence that you had on the way back up. Okay, where was the confluence of the resistance? Well, there's your monthly level, isn't it? So there's your monthly level. Let's just delete everything a second. I'll show you the confluence that you had on this one. Okay, so that's monthly, isn't it? So 2 candle closes on the monthly chart, and then we're taking fibs from the overall high down to the low. Where's your confluence? Well, look at that. There's the confluence of 618 on the monthly, and you can see the monthly is what held it down, but the confluence there, that was confluence, isn't it? That's what you're looking for to recognize where you're going to get rejected, essentially. So there was confluence on the way up, definitely between that monthly and the 618. On the way down, there was not the same confluence. Okay, but yeah, that's basically how you pull your fibs. Okay, so always take your fibs from left to right on the chart. When looking for resistance on the way back up, you pull from the high down to the low. When looking for support, you pull from the low to the left to the high on the right. Okay, so hope everybody understands that one. Okay, cool. So moving on here, Fibonacci retracements. I do not place stop losses using Fibonacci. I've already mentioned this actually, but yeah, I wouldn't just arbitrarily, for example, buy the 618 and I wouldn't myself put my stop, for example, $1 below the 66 and be like, well, this is holding. I wouldn't ever myself place a stop loss $1 below the 66. That's not how I trade. I would go off of market structure. So for an example, if I was buying 7,400, which as you all know I did, bought 7,400, my stop loss was not going to be 6,791, for example. That's not how I used my stop. That's not how I use a stop loss. But Yeah, just important to be aware of that. In a strong, okay, so now this is where it also gets pretty important when you're looking for retracements and how to identify trends. Okay, so there's so many uses. There's so many uses, as you're going to find out over the following week / month. There's so many uses of Fibonacci. It's absolutely amazing. So for example, when we're recognizing the strength of a trend, this is where for example, like, as I've done in indicators, I say I don't need an indicator. Okay, from fibs you can tell the strength of a trend, so you don't need to look at MACD, you don't need to load up RSI. You can tell the strength of a trend by looking at the chart. Then you add in fibs and you get an even stronger indication. Price action is all you really need, but and a strong uptrend on a macro time frame, the 382 Fibonacci level is generally not lost as support. Okay, if it is lost, expect a retracement to the 618. Okay, losing the 618 is a possible early indication that the uptrend is over. So what I mean by this, in a trending market, I guess the best example would be the stock market right now, which is just trending upwards very clearly, as are many stocks. Okay, so think to Apple. If you trade stocks, think to Apple right now and the uptrend that's in. In strong uptrends, you generally are not going to be losing the 382 fib. Okay, so if we pull over to this chart a second. Okay, so this was one that I loaded up on Bitcoin. I know the majority here are for Bitcoin, hence why I've done this on Bitcoin, not the stock market, as examples. But you see here in an uptrend, you really started getting impulsive after you break 4,000, isn't it? So once you break up from 4,000, that's where it got impulsive. But once you broke 4,000 here, what you can see is you don't lose the 382 until you top out at a very high. Okay, and I remember this very, 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 very well. While we were in April, while we were in May, June, I was saying that this is the level to be buying in this uptrend, because you don't lose this up. While you maintain the 382, it's a buy opportunity. You've got to be buying on these retracements, and it worked out very, very well, and I managed to catch this. So I've been preaching this for a long time, I guess. But here you can see from the low of where it got impulsive to the high, you hit the 382 to the dollar, and you get your next impulse up. Okay, so then again, from the low to the high, you hit the 382, and you got an impulse up. So that is very clearly on the two retracements. And this was another one, by the way, from the overall low to this high at the time. So this was obviously filling the futures gap. So this filled the futures gap. And if I just put this on 382 a second. So if you feel, looking at the futures gap, from this low of the very low to what was the high of the time. Okay, what was the high of the time? You drop down to the 382 there, filled the futures gap, which was your confluence. So you had the confluence of filling the gap, and you also had the confluence of the 382, and that was obviously another perfect opportunity to buy back in. Then you had some Bitfinex FUD. I think this was the Bitfinex FUD that dropped down to the 382 you held. Here was just another, I can't remember offhand now, but you got the retracement, and you got your impulse up. So clearly, okay, while in a strong macro uptrend, the 382 Fibonacci level is generally not lost as support. Okay, you don't really want to see a close below that. Okay, if you start losing the 382, it's not saying that the uptrend is definitely over, but you would start doubting the potential, possibly. Okay, but really the 618 is your most important to the 66. Okay, if lost the 382, expect a retracement onto the 618, if we're honest. Okay, and then if you lose the 618, it is a early indication that the uptrend is over, or extended consolidation is coming. So one of the two. You're either going to get a very extended consolidation if you lose the 618, or more likely the trend is over, and that uptrend could possibly reverse to the downside, as you see here on Bitcoin. Okay, so we obviously held the 382 here. Then from the low to the high, you hit the 618. Look at this. You hit the 66 here to almost, we're talking about the low, we're talking about about $5 difference. Okay, from the low to the high, you missed it by about, 66 was about $5. That's pretty perfect in my opinion. $5 from the low, and you obviously get a crazy 37% bounce. So at this point, okay, so thinking back to what I'm trying to teach, that you lose the 382, expect price to come down to the 618, where you should see support on the 618. So clearly, if we just add in everything here again, you don't really hold the 382, do you? So the 382 doesn't hold. So after you don't hold the 382, expect the 618. And as you see here, if I just put this, I'm just trying using this to try and keep the charts clean. You pull back to the 618, you get another bounce. Okay, so you get a very strong bounce. There was no close below. So at this point, there was no need to really think that you know, we could obviously use other TA and have the idea that it was, but at this moment in time, there would be, you wouldn't be thinking, okay, here we go, downtrend, uptrend's over, and we're going down to new lows. But you know, you see a very nice bounce where you would be looking to buy, and that obviously had a 30% follow through. But it's this moment, okay? So in July, as you close below the 618, you have then two options. You see the closes here, and you start thinking to yourself, possibly now the uptrend is over, or we're going to range sideways for an extended period of time. Okay, that was the early signal that this was happening, and as we all can see, what we did in fact for a very long time, range sideways. So check number one, we got sideways consolidation. Check number two, that this was an early sign potentially that the uptrend was over. Well, in fact it was, because we did obviously come down to new lows there of the uptrend. So, you know, just something as very simple as, you know, adding on this, you know, just sort of thing. But, you know, that was the early sign that the uptrend was over. Closing below the 618 is never good in an uptrend. It's not to say that it's absolutely impossible that we couldn't have done that. Absolutely, that's not what I'm trying to say here. There's no guarantees in trading. We could have done that. But that was just an early signal, to a sign of weakness, in my opinion. That's a sign of weakness, not holding the golden, you know, zone there. So that's just what I wanted to stress. And, you know, lastly here, about a strong level for me, that, you know, let's say that you get a very strong downtrend. So I'm talking about weeks, month, you know, really months to years. We're talking about very strong downtrends. Okay, once you get very strong downtrends that are lasting these months to years, it's generally not a good idea to try and time bottoms. If you try and time bottoms, more times than not, you won't actually buy the bottom, and it will continue downwards. The same as if it's going up. If you're continuously trying to short tops, you're generally not going to do it well. You know, it's very, very, very hard / impossible to consistently buy bottoms and sell tops. The more times you do it, the more times you're likely going to lose. Obviously, that, you know, people obviously have to time tops and bottoms to the exact, but generally the majority are not going to do it. So how can you avoid essentially buying bottoms and selling tops incorrectly? Wait for the 382 to be either claimed as support. So if you're downtrending very, very strongly for an extended period of time, just wait for price to at least claim the 236 Fibonacci. Once you've claimed the 236, then that's when you can say, okay, I have a possibility, a strong possibility of a low being in or a high being in. Okay, so again, an example on Bitcoin here. Okay, downtrend, what we're talking about here is a year-long downtrend, so a year-long bearish market. Okay, so that was a bear market. Obviously some people bought 3,100, but was it arguably a good idea? Well, I guess in the end, in hindsight, it was. But what could have been a way to help you not to essentially keep trying to time the bottom? You know, people tried buying 6k, people tried buying 5k, people tried to buy 4k, you know, each time losing money. What could have been one simple way that you could have avoided doing that? You know, if you waited here, well, wait for the 236 to be reclaimed. You can see here on Bitcoin that you essentially get, you know, you do hover around it for a while, but you go from, let's move this up exact, from the where it got impulsive to breaking down, 236 rejections. You know, then at this point, this is where you arguably start to hold it, where if you zoom in here, this is where you start closing above, low, closing above, green. That's then obviously you start getting impulsive. So, you know, 236 is a good way to just not be trying to time bottoms all the time. So, you know, so you avoid essentially always trying to time bottoms. If you wait for at least price to get above the 236, well, you can have more confidence in that being an overall low. Okay, that's where you could have, you know, confidence in saying, right, here we go, that is now likely that we have seen a bottom, where you can use stops below that low, and obviously your invalidation is coming back below it. But if you wait for the 236 to be taken, or, you know, reclaimed, how I like to say it, once that's claimed as support, you can have much more confidence in this being a low. For example, if you had just seen this, okay, I'm trying to just refer to this section here. If you'd seen this low and then a bounce up to here, say 3,600, I still wouldn't have confidence in this being a low myself, because you can always say, oh, this time's different, this time's different, you know, this low is going to hold, this low is going to hold, this low is going to hold. Well, why do that? Why think this time's different? Or, you know, in a downtrend, you just expect it to downtrend continuously until you get given a reason. Okay, when's the reason where you have more confidence once a 236 is reclaimed? And obviously eventually you reclaim it and price sort of takes off. So that's just, you know, in every market, not just Bitcoin. 236 important level to have confidence in a high or a low being in. Okay, once you've lost or gained that level. So those are the why I said at the start 382, 618, and 2. Oh, I said 382 is an important level, but for the downtrends 236, 382 is just an important level in general, as we'll cover. But yeah, that's just something to highlight for you all day. So that was everything that I covered in this slide. Let me just take a drink really quickly. Cool. So yeah, moving on now to what I refer to as the Champions Channel. This for me, I honestly, you will not have seen this before. I don't think anybody, period, has ever used this. This is something that you're going to see from me, and it honestly is amazing. So what is the Champions Channel? Okay, the Champions Channel is the space between the 618 and the 66. Okay, and this is not arbitrarily done. I have obviously, you know, as you kind of know, that I'm a very systematic trader, as well as data keeper. So I log every single trade that I take. Every single trade that I take is logs, and then obviously I can generate statistics from this. And from my trades that were taken from the, you know, what back then I was referring to the 66 to 65, that obviously generated decent trades. But, you know, I'm always looking for more of an edge. You know, if I can see a way of generating more of an edge, if I can see a way of getting, you know, essentially, you know, a little bit of a lower entry, if I can see statistically that more times as it comes down to the 618, it's coming to the 66, well, let's adjust our fibs into that edge. And I saw through my own data collection, through my trades that I've taken, specifically on crypto, although as you'll see it works across every market, but specifically on crypto, very nice. The 66 is what I now use, hence I've coined the term the Champions Channel. Okay, and this is the channel of space between the 618 and the 66. So I hope I don't get asked that question anymore. But yeah, that's what it is. Okay, and I refer to this as CC. So if you ever see CC, that stands for Champions Channel. Okay, so Champions Channel. So that's what we're looking for here. Okay, and this is what slide I was after here. Sorry, the Champions Channel is the space between the 618 and the 66 on the Fibonacci retracement tool. I recently started using the 66 after collecting enough data to back up that it is literally better, in my opinion. Hence, you know, once I've identified an edge, once I have statistics to back it up, obviously I've been testing it for a while, and I didn't want to release it publicly and tell everybody in the group to use it until I had confidence in it myself. Okay, so I had the confidence, I had the data to back it up, hence why I now teach using it. So yeah, just another note that I would never place my stop loss below the 66. I always use market structure for this. And when buying as well, this is just another extra note. Okay, I would always place my entries, okay, a front run of the 618. Okay, so I'm never exclusively buying the 66 on its own either. Okay, I would always look to go front run of the 618. Okay, then possibly the midpoint between the 618 and the 66, and then the 66 itself. So when you're looking for this trade, don't just buy on the 66 itself. You want a front run. Okay, it could, as I've mentioned here, it could only be by a few dollars or a few sats, but you want to front run the 618. Okay, so you're generally going to have 3 entries on it potentially. Okay, if you like to ladder, then a front run of the 618, the midpoint of that of this channel, and then the 66 itself. So 3 entries. Okay, because sometimes you're going to see front runs of the 618, and if you're only buying the 66, well, you're left without a trade. So you know, average it down. Okay, average it down. That's what I like to do anyway. So 3 entries basically: front run of the 618. Midpoint of the 2 and 66, or you could just do 2 front run of the 618 and 66, but you want that sort of average entry in there of not just always buying 66. You want to have that front run, in my opinion. Okay, so yeah, that's what the Champions Channel is. Okay, yeah, as mentioned there, like, it's also formerly known as the Golden Pocket. You know, many people refer to it as the Golden Pocket, but I found that the 6.5 is literally kind of redundant. It doesn't work very well anymore. So yeah, the 6.6 through my testing is the one to use now. So yeah, this is just a few examples. Obviously I could go through 100, but I didn't want to waste the whole stream. But here we can see this. So this is, I've used examples across different markets just to show you that it's across all markets. So this is obviously the SPX here. Okay, so the you know, the index. So here from high down to low, we hit the 6.6 to the exact dollar, okay, and that's where we obviously see a a rejection to the downside. So that's the stock market. Then I've got an example here of Tron, obviously in crypto, from the high to the low, come up and hit the 618, well, sorry, 66, 66, 66, 66, 66, 66. That's where the clear resistance is, and you drop down, okay. There's another example here on oil, obviously a very big market, from the low to the high, hitting the 6.6 again to the exact cent, getting a very, very strong reaction there. Again, hitting the 6.6, and you're seeing another very strong reaction there. Here it's itself, the midpoint of the channel, and a bounce, middle of the channel, the bounce. And this is obviously followed through again to higher prices, by the way. So this held up again. But yeah, that's US oil, and this is another example on Link, obviously crypto, from the low, from the high to the low. You can see here coming up to the 6.6 to the exact, sat. Okay, that's where you see rejections and price comes down to lower prices. Even today, just load up the Bitcoin chart. And you have seen today, I think about 4 times the 6.6 was rejected to the absolute dollar. So yeah, if you were in the Champions group, you would have done that today with us. It's literally amazing. Yeah, it's pretty decent. So now moving on, I'll take all the questions at the end, by the way. But yeah, the Fibonacci confluence. So this is what I was hinting on earlier with ontology. Obviously, like when we were looking at the confluence between for when I was going on that take profit. So this is the I want to start with. So for example, when I was looking at that take profit, okay, when we were looking at this, we just zoom out to the 15-minute here. Okay, when I was looking at this 382 level, for example, that was confluence of the overall high to the low, to where it got impulsive to the low, and our Fibonacci confluence was clearly the 382 and the 6.6. So that's was a very good take profit, wasn't it? Obviously it could have smashed straight through, it could have absolutely gone straight through it, but it's sensible to take profit. That's a 13% bounce. So that's Fibonacci confluence for resistance, just so you're aware. But yeah, going back to the slide that I had listed here. Okay, so Fibonacci confluence is helpful. You take a few different fib pools from different levels, and you search for an area where several of the Fibonacci lines line up in the same region. This creates a stronger level of support. Okay, for an example, pull from the overall low, okay, from where the move got impulsive, and the local Fibonacci pool. So that would give you 3 different Fibonacci pools. Obviously, you'd be putting it in this example from to the same high. So from overall low to high, where it got impulsive to high, and a local, what you're actually trading now, low to a high. And then you'd have 3 different Fibonacci's on your chart, and what you're looking for is where they all line up very, very, very close together. Okay, if they're all spaced out and there's space between all the levels where there's clearly no confluence there, you want to see them line up very close together, just like just the example on ontology, that's what I class very close together. Okay, so that's clearly Fibonacci confluence, and you would expect reactions at this price, and you get the wick through, but ultimately you wouldn't have been annoyed about taking profits there. But yeah, that's Fibonacci confluence. Okay, so here you see another. Oh, so this is a perfect example actually. So this is the perfect example again on Bitcoin, because it's still in play right now. So if we zoom out to Bitcoin a second, okay, we zoom out to Bitcoin. Let's just delete everything a second. Okay, so when we go from here, oh, I need to add in this, and I can keep this on the chart. Okay, and then we'll go from the high to the low. Okay, I think actually I pulled this from a different can't remember the fib pools that I done now. Oh Dios mío, from this low, this high to this low, the 382, and then I pulled from this. It's because the low has changed, obviously. Okay, sorry, getting confused there, because the low has obviously changed since I last pulled this. I just pulled it to the last low, which has happened, and obviously from the screenshot it's a different low. thought I was going crazy there, but yeah, this is the fib pool that I'm referring to here. Okay, so we have to imagine that we've not seen this. Okay, so when we had seen this low formed here, then that's where we would have pulled, okay, clearly from our high down to our low. Okay, and then from this high down to what would have been the low at the time. And you see here, where do the fibs line up exactly together? The fibs line up exactly together here, don't they? There's the 382 and there's the 0.5, and they're right on top of each other. So price obviously come down, it formed that low, and it hit that fib confluence exactly, and that's where you then got the next move down. So you see here, where you know, there's not any Fibonacci confluence, is there, between this and another number, this and another number, this 618 and another number. That's the fib confluence right there. There's no confluence here. There's arguably no confluence there. And this is 236 is not that good of a fib for use for this sort of thing. But there's Fibonacci confluence, isn't it? There's the 236 and the 382 and the 0.5 lining up exactly on each other, and that is catching the high of the move for the move down. So that's Fibonacci confluence, okay, where you take a few different pulls, okay, so you take from the high to the low and a high to the low. To expect resistance on the way up, you obviously saw the 0.5 on top of the 382, and what is even better for me, it was also the weekly. So you saw the weekly, so let's just do it with everything loaded up on the chart. So from the high, okay, the high of the move down to the low, okay, let me just put on standard again. So we see the 382, okay, and then what was the high to the low of the time. Okay, low of the time. Sorry, when I took it down here, I was confusing myself. From the low of the time, and you see exactly that 0.5 on the 382 on the weekly. Okay, that's obviously very, very strong resistance, and you literally do hit it, and you reject, and you're talking quite a big rejection, 6%. You get that 6% rejection. So that's perfect, isn't it? That really is Fibonacci, what I call Fibonacci confluence between fibs. Okay, so to find Fibonacci confluence, you need to take at least 2 different Fibonacci pools and then search for fib levels that match up close to each other, thus creating a stronger Fibonacci level. Obviously, we know that on top of this, we have a weekly level on Bitcoin, so even stronger again. But this was obviously the 382 and the 0.5 lining up exactly together, and that's Fibonacci confluence to find resistance, and that came down to another low here. And another type of Fibonacci confluence that you could see with like channels, for an example. Sorry, I didn't zoom out enough on this one, but it looks a bit weird, I guess, when I've not zoomed out here. But from a high to down to the low, what you done here was you come up to the 6.6, okay, and it was also in confluence with a parallel channel. If you want to go back and look, this would have been happening on October the 28th at 10 minutes past 11 GMT. Yeah, I'm not going to load it up on this stream. I should have zoomed out, I guess, while taking this print screen. But this was, you bounced basically off of the 618 and you come up to the 6.6 exactly. And that's where you got a rejection 2 days ago. So yeah, you can go back and find this one. But yeah, this was a confluence of the top of the channel. So you can see here, low to high. That 6.6 that lines up with the top of the channel, that's again, for me, a very, very, very strong resistance to be shorting. And you know, it doesn't have to be like Fibonacci confluence. That this is like an example of channel with 6.6 confluence, e.g. giving you a very strong region to be looking for a short, for an example, yeah, because that's a confluence of fibs and market geometry together. Okay, and what I want to cover here, sorry, I will cover all. I've covered all your questions shortly. This was another very good way to look for fibs. Okay, and I will go over some examples at the end for you here. But for a you know, high probabilities here of being in the 618 to 6.6, the champions channel, then if you bounce again within that champions channel, as we'll zoom in on link in a second, gives you a very high probability long. Okay, very high probability long. If you're going from low to high and you're coming into the champions channel and you're starting to bounce, or pull another fib from that bounce where it starts getting impulsive, okay, and look to buy. And I'll give you a few different examples on XRP and link. So if we come over to link here, okay, we'll zoom out slightly. Okay, you can still see I've all got this listed, but this was obviously, okay, this was obviously CC bounce. So from the overall low to the high, we come into the champions channel. This is where you got to be looking as a very good area of value. Okay, you've got to be looking at this as an area of value. What was perfect about this when we zoom into this? So we're zooming into that champions channel, and then what do you see here? As you all know, this was a chart of the week that I bought this. So this is not hindsight trading. I literally traded this, and as you all know, it was a chart of the week. Must have been about a month ago. So yeah, this was very nice indeed, and this was a buy for me from the low. So we're already in the overall champions channel, and then again from the low to the high, you come back into it again. You come back into it again. So you're bouncing from the champions channel within the champions channel. This should be a buy. That's very, very nice to see. You're already bouncing from where you would expect, and then you start bouncing again. Okay, obviously I've not got marked out all my levels on this, but if you refer back to the contenders stream, that would have been probably around the 17th of September. You'll go through. I'll listed all the reasons for entering there, and obviously that from that bounce you got a 143% bounce in a, about a month. So that's crazy gains, and it all started from the 618 within that 618. For another example that I'll give you is XRP. So XRP, obviously we had this starting diagonal, okay, leading diagonal. From the low to the high, we hit the 618 exactly. So this is a different because you're not bouncing within it, but just another example that I can give from how these work very nicely. From low to high, hit the 618 to the exact bounce, and then again from low to high you hit the 618 exactly, and you got another bounce going on. So that's 618 bounce, and then looking for the retracement from the 618, and it clearly bounced again. Link is a better example because that was the bounce starting off within the champions channel and then buying the champions channel while you're still within it. So there's a very high area of value there. You have to remember that after something moves, let's just remove this temporarily. Well, the reason why you look at this as an area of value is because you have to remember that Link had just pumped, a few months before, nearly 400%. After this coin in a year is starting to move, thousands of percent. This sort of retracement, people are looking at this as very high value. That's a very high value area. So you're looking at interest around it. Again, you want to, generally, if you're looking on this in the macro, you'd front run the 618. So you would front run it. You're not just buying in here. Arguably, obviously I'm more of a here you would arguably be looking to buy or front run the 618, buy in the middle of it, and you can see here if you've done the 3 buys, the 618 you'd have front run the 618 buy, the middle you'd have buy, the 66 you obviously wouldn't have got filled, but you would have got filled 2 out of 3 positions. Not bad, is it? And then obviously as you start breaking up impulsively, cancel your lower bid, and you'd have to obviously put that in a little bit higher, but with more probabilities that it's hold. So you would have filled 1, filled 2, third doesn't get filled. As you start breaking up impulsively, cancel that lower bid, add in a little bit higher. Okay, so there's that example of that. Let me just take a drink really quickly. Let me do a few questions. Would you think that the 6-6 works so well because so many people count on 6-6, 6-5 holding and therefore pushing it to 6-6 and potentially hitting stop loss before the range? Potentially it could be that obviously the 6-5 is well renowned. So it could be a simple case of algorithms adjusted to 6-6 to stop people out that use the 6-5, and that could potentially be a good argument as to why the 6-6 works so well. I just find it literally, I guess you can see for yourself from everything that I do in the day. Like I post my charts literally all day in the champions chat, and I'm forever posting these charts, and it just works really well. I guess arguably it could be because people use 6-5, and to stop them out, you hit the 6-6. Seeing Bitcoin moving a little slightly here, but yeah, that could arguably be a really nice a reason for that. But there's obviously no way to ever know. That for me, just like data shows. But this is not just recently as well. So I've been monitoring this for, I would say, about a year and a half, like specifically back to, this is the hard thing about back testing, like because I do it all manually, it's really time consuming. I don't have like a automatic back tester, like it's all had to go back through, but for about a year and a half it's worked really well. How many touches of the CC are acceptable, safe to long? Do you get suspicious after 3 touches and expect a loss of the level? To answer this question is really difficult because it's so dependent on context. There's going to be times where you see, for example, 3 touches and I wouldn't be worried at all, and I would still expect follow through. But there are going to be times that maybe you start grinding along it and you expect a drop. So it's really hard to give a definitive answer, and it's very dependent on context and volume. For example, ontology, like this is a good example today. So obviously here you know, zooming in here. Oh yes, here we go, lads. Like, you know, how nice is this? Making money while streaming for you all. You know, here you hit the 6-6. You don't really hold it, do you? So at this point, many people are going to be scared. Like, I'm literally not scared at this point. Still confidently in my. I guess for me, the weekly was important, but you know, here many people are going to be shaken out, closing their positions, thinking we're going lower. You know, essentially, we get a very nice move to the upside. You know, being 14, nearly 15%. You come back down, and today people are arguably going to be scared about buying this again. But I mean, we're talking about a sat loss of it, but you get 1 touch, 2 touches, 3 touches, and in the fact that you're coming down in a descending triangle, people are going to be shaken out of their positions. I was aware of this, and that's why I had a stop loss in place. So I did have a hard stop loss on this one, but stop loss was placed, and I wasn't closing out my position prematurely thinking, well, there we go, it's over, we're going down. I held confidence in this. And essentially, when we broke the trend line, I had more confidence. But at the time, I wasn't thinking to myself, well, it's over. You know, my stop loss is going to be hit. You know, I held in the trade. And here you can clearly see it grinding along it. Here, a Zach touch to the sat. Here, a Zach touch to the sat. Breaking that. And well, the rest is history. We're up again now 6% in for a day trade. That's very good, if I'm honest. But yeah, like I don't worry when it starts bouncing along it. I'll set an invalidation, I'll set a stop loss, but I wouldn't start worrying about it. There are going to be times, so this is where trading is not perfect, where I can't give definitive, like 100% answers, because there are going to be times where I see, you know, this, and then it comes down and it starts dragging along, and I will say to myself, right, that's it, I'm cutting the trade. I'm cutting the trade because something's going to, you know, there's going to be something, another factor that's telling me we're going to be breaking down. So there are going to be times where I would cut the trade early because I believe we're breaking down, because it's not getting the reaction that I want to see. So there are times where I will cut it early. So it's not a 100% definitive answer that I can give, because there are times where I will cut a trade. But generally speaking, I'm not going to cut it early unless I can see a hard reason to cut it early. E.g., it's not going exactly as I planned. Like this for me is, you know, I have to give my setup time. That would be too early to cut. The same, this would be too early to cut. But there are going to be times, you know, if this had extended on for, you know, a day, 2 days, it's not getting the reaction that I want. I want to cut the trade and move on to something else, just because I view more opportunity on something that I can get in on. But yeah, I hope that answer is helpful for you. When price reacts, bounce or rejection to the 618, is that because most traders use this tool and place orders there? I suppose yes, that thought I'd ask. Yeah. I guess it's kind of like a self-fulfilling prophecy in that regards, where everybody looks at the same region. Well, you find support there because everybody's viewing at value areas. So in that regards, you get the opinions of people saying, well, technical analysis is a self-fulfilling prophecy. I can't say they're incorrect, but you have to remember that you show a chart to 10 different people, and 10 different people have different answers of what's right and what's wrong, what's bullish, what's bearish, what's support and what's resistance. So in that regards, how can it be a self-fulfilling prophecy if you show one chart to 10 people and 10 different people have a different perspective? How can the self-fulfilling prophecy you know, go like that if everybody has a different perspective on the market? That kind of invalidates the idea, doesn't it? So in my opinion, it works because it works. I don't try and think into this. It just works because it works. And then this is where statistics and analysis and journaling and keeping records are very helpful, because I can say statistically, this is profitable for me. This is an edge for me. If I had no statistics to back this up, well, I'd look like an idiot trying to teach you, because I couldn't back up what I couldn't back it up essentially. But I can say statistically, for an example, one of my very, most winning trades is where you see confluence of a weekly and a CC, for an example. Like, this is very, very, very high confluence to win a trade. So when you see these confluences, like, I would take it 100% of the time. 100% of the time I would take the trade. There wouldn't be a time where I wouldn't take it, okay? Because I might think it might not hold, but my statistics tell me it's more likely to hold than it's not. So there's never, ever, ever, ever going to be a time, unless for some, I guess I cannot say never, or 99% of the time I'm always taking this trade because my statistics have shown me that this is a winning trade to take. So why would I not take it, you know? So yeah, these are confluences that I really, really like. So yeah, but you know, you show that if you show this chart to somebody else, that they're gonna give you different levels. They're gonna tell you, oh no, you know, ontology's coming down lower here, X, Y, and Z. You know, not everybody wins in trading, and that's the argument against self-fulfilling prophecy. But yeah. Could you show me the fib levels on BAT BTC 1 day and 4 hour? Not entirely sure where it got. I'll do it at the end. I'm not doing it now. I like having 3 levels at the CC to enter and ladder trade. What other levels would you recommend front run? I like having 3 levels at the CC to enter a ladder trade. What other level would you recommend to front run the 618? Maybe the 576. That would be an even 0.042% between all 3 levels. I like having 3 levels at the CC to enter a ladder trade. What other levels would you recommend the front run the 618? Maybe the 576. What would that? Oh right, so you're looking for to like hard systematically front run to 618. I mean, I just put like a few dollars or a few sats, so I don't use a Fibonacci level to front run to 618. I guess you can absolutely be welcome to try put in. I think this is your question. Apologies if it's not, but I think the question is put on a fib level that slightly front runs this, like maybe this, you know, just a front running fib, and buy that to front run. I just myself use a few sats or a few dollars to front run. I've not put in a fib above this. I just front run it in general. But yeah, that could be something actually that we can start recording and seeing, is there a fib that front runs really well. So I would be more than open to test that, and I encourage you to do the same with me, because that would actually be interesting. I have always just done a few sats or a few dollars, but that would be really, really interesting actually, to see if there is a level, a Fibonacci level above the 618 here, or technically below the 618, that is good for front running. That's something that we can definitely test together, and collect those, you know, collect that data. I will go through that one for basic attention token really quickly. Generally, I don't like in these streams start doing requests for charts, but I guess this is a helpful question of the fib levels on BAT BTC 1 day and 4 hour. Not entirely sure where it got impulsive. So, well, clearly there's a fib pull from the high to low, and you can see here on this that I've got looking for around a 618. Arguably where it got impulsive, I mean, there's a few areas where I'd say it got impulsive from here to here. You clearly through it right now, so that you don't need to bother with that pull anymore. And really the only other one I would do is down here on the 25th of September. Well, yeah, look at that. So you from the 25th of September to the high, you actually hit the 618 exactly here, and you got an 8% bounce back up to that monthly. So yeah, those are the only 2 fib pulls that I would do. But you can see there's no confluence between the levels there. You have here at this 786 and 886, but there's no confluence between the point where you really like to see it, the 382.5 and 618. There's no confluence between them there. So you would just have one or the other, or keep them both on your chart. You can actually see from this low, where I would say it got impulsive, from that low to the high, you are hitting the 618, and you've seen an 8% bounce and 2 8% bounces from the level. That's very good indeed, isn't it? So you have seen bounces from there, but overall, I'm you know, remaining patient for this level, unless you reclaim the monthly. If you start reclaiming the monthly here, you know, if you do higher low, higher high, hold the monthly up again, well then clearly the likelihood of coming to this level is very low indeed. But until that's happened, until a scenario like that's happened, well, there's scalp trades, there's day trades to had on BAT on the more aggressive fib pull. But ultimately, for swing trade, you'd be waiting for lower levels until you see that you're not going to get them, I guess. So I hope that has helped you on BAT. Sorry if I've missed some questions here. There is quite a lot. As a minimum, how many other reasons are you looking for to go with fibs? Would one fib CC plus a 55 1 hour EMA be enough for you to take? Yes, if it is also in combination with the trend. Okay, so that would be enough for me. A CC, for example, the Champions Channel with an exponential moving average, if this is in confluence with the trends, yeah, I would take that. That for me would be okay. It would be okay. Obviously, EMAs. Today I've traded with EMAs with the confluence of that, but generally EMAs are not strong supports and resistances. They're one of the weakest. So just remember that EMAs are not. Obviously, the higher the time frame, the stronger they are. But generally speaking, I don't find that EMAs are. I don't want to say they're not good because I use them. I use them daily, so they are good. But there's stronger confluences in my opinion. But the EMA is definitely acceptable to trade from. Let's just put it like it's fine to trade from there. Ray, is confluence of fib levels the reason for entry, or do you look for more indicators to confirm? Always you're going to look for more. So if you see Fibonacci confluence, if you see two fibs together, you can always definitely add in something else and see, are you then getting a third, a fourth? Two for me is enough. That would be good entry. But then if you line it up with a third technical tool, or you can have very good confidence in it holding, you line it up with a fourth and it's, this is the thing. You could see six confluences lining up together and say, well, this is the most perfect trade in the world, and it breaks. So you never can get 100% guarantees. I've had it before where I have had, we're talking 4 different factors lining up together, having confidence in a level holding, and the level breaks. And that's just technical analysis. And that's just the part of the game. That's why you use a stop loss and you have risk management, because you can have technical levels, really, really technical levels that still don't hold. So I'm not definitely not saying you're not going to get losses with this. I trade this every day and I still take losses. But you have to know that losses are part of the game. Losses are part of trading. So please do not think you're not going to lose trades with this, because 100% I guarantee you're going to lose trades. Okay? It's just the trades that you win are much bigger than your losses, and if you do this well, you're going to be winning more than you lose, but you are definitely going to take losses. Okay? As I mentioned, I've had lots of times where I've seen 4 or 5 levels line up, and I have felt very confident in a trade, and the level breaks. So just be aware of that. But yeah, I 2 fibs together would be nice confluence for me. Yeah, Ray. At times, with a larger time frame pool, it seems that the 618 is so far away. It seems that coin would have to seriously drop to reach it. Absolutely, but this is part of patience. This really is part of patience. The best example I can give you is Link, okay? How many of you really doubted that after a move of 3,600%, especially this year, obviously the Google news and everything that it had, another 150%, how many of you would have looked at Link and said, oh, this is never coming to the 618, never coming to the 618, I've got to buy more early. How many? I guarantee so many people thought it. If you had the patience, look what happened. And this is recently. This is one really, really recently. That's why I'm referring to this. But it happens all the time. You have the patience to come into here, and it works out very, 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 very well indeed. So a lot of the time you're going to take those fib balls overall, and it's going to be like, well, it's never going to drop down to there. But it does happen. Obviously, though, this is the thing. It doesn't always happen. So you have to use your idea. You have to think, is it likely to happen? I guess on Link, all you can see here is a series of low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So at this moment in time, where it looks like a falling wedge, doesn't it? But you start coming down in these lower highs, lower lows, and that's why you had no confidence in higher fib levels holding. If you come down and you hit the 382, and then you hit the 382, you get a nice reaction and a a higher low, and then you break that high and you come up for a higher high. So then you've got a higher low, and a higher high off of the 382 fib. Well, that's when you might say to yourself, okay, well, the 618 is not likely to hold right now, so I'm going to buy in higher. Okay, but until you see market structure change like that, well, you're going to be expecting lower prices, aren't you? If it's just moving down like this, expect it to come down. It's only if you hit higher fibs and then change market structure on a macro time scale, like the daily that you're on here. Well, that's when you could say, okay, there's no point in waiting for the Champions channel, because it's probably not going to hit. You don't want to be, one of the worst things you wanted to be doing is, seeing, for example, price come down to the 382, form a really nice bounce, a higher low and a higher high, breaking that high, and still be sat waiting for this, because you're going to see it just go up and up and up, and you're just going to be sat there thinking, well, I'm still waiting for this low. Yeah, goodbye. It's not coming for you. You know, yeah, you know, you have to just use market structure for that. It seems there has been a large impulsive move. There's much higher chance to retrace a significant amount. Correct. Yes. You know, this is a good example. When Link moved up like it did, Link moved up literally, you know, 150% in you know, we're talking about a few days. A massive impulse like that, well, no support gets created on the way down, does it? So this is a very nice example that it was all-time highs. You've never seen these prices before, so there was no support or resistance on the chart. That's why you fly up so hard. But obviously when you fly up so hard, well, you come crashing down just as hard all the time. So, you know, you fly up really hard, well, you fly down just as hard. So you know, because you don't create any horizontal support on the way down, you know, it's just people buying. Well, then when the floodgates open, and people just sell and sell, okay, until you reach an area of value where people are then viewing this as a value area, old highs, for example. So look at the confluence, okay, old highs, okay, coming down onto the 618. So that's old resistance flipping into support. You know, this was for me such an easy, I hate saying it's easy, but it kind of was, trade. So yeah, that's how you can look at that. Because 6 say it's bullish and 4 say it's bearish, then Boomer goes, exactly, like, there's always winners and losers in the market. There's all, you know, you have to have losers to have winners. You know, we're more on the winning team, I guess, here. Tried to front run. I tried the front run of a straight 6, not the 618. Seems to hit quite a few too. Fair enough. Yes, you got it. Understood. Just front run it. We'll try and test a fib and share. Yeah, I would also like test that as well, because I think it would be very interesting. Could you tell us about Elliott Wave fib ratios? Not in today's video. I'm sorry, that's literally not going to have enough time for that. I have obviously though got on the website a slight cheat sheet for this of your Fibonacci ratios. So I refer you to this basically. Well, I'll just link it to you. There you go. There, I've kind of like listed where you can look for Fibonacci ratios. Okay. 382, 618, 1618. I've got that on the website, but I'm definitely not covering it today. No time. And I also want to do it in a chronological order. Where next week I think I will move on to negative fibs. Okay, so negative fibs is what I want to do next week. So yeah, that's what I'll do next week, negative fibs. So does anyone else have any other questions for me tonight? Well, we can go over Bitcoin while people are thinking about any questions they may or may not have. So what can we see here on Bitcoin? Okay. I really hope that you've enjoyed the start of the Fibonacci series as well. So I hope that by the end of this, you can all use Fibonacci retracement well. And then obviously we'll move on to the extensions, the negative, the expansions, the harmonics, etc., etc., etc. And each week we'll just get, you know, better. You'll get more and more proficient, because obviously today is just the beginning. And you know, the more that we progress, the more that I teach, the better you'll get with Fibonacci. But I think today has been a good starting point for hopefully everybody. So yeah, let's go over Bitcoin a second. Okay, so let me just delete this and clear up the chart a little bit. Okay, let's delete this. Okay, there we go. Really simply, let's show you some amazing Fibonacci work. Okay, from the low of the move to the high of the move, we hit the 0.5 fib and got a very strong bounce. I haven't mentioned the 0.5 fib much tonight, have I? And you might think, well, Dan, you mentioned the 0.5 fib here and it got a bounce, but why the 0.5? Why are you mentioning the 0.5? Well, this is where harmonics come into play. So if you know very well indeed, I was trading this off of the shark harmonic. Okay, so where were my pools? This was the shark harmonic that I was trading. Okay, and as you all know, I was originally trading it long. So as you know, I bought 7,400, and originally I was looking for this target of this shark to around 9,200. Well, that smashed straight through target, didn't it? But from the shark harmonic, okay, so this is the shark with very much extended, not technically valid, but nevertheless in my opinion, I kept with it. After you've finished the shark harmonic, well, from a shark harmonic, you go into a 5-0 pattern. Okay, so it leads on. Once you get a shark, you always trade a 5-0. Okay, so what's a 5-0 pattern? I will be explaining this in more detail, but a 5-0 pattern is to the 0.5 fib. So you get a shark play out perfectly, which is a bearish shark here. So once you hit the top, well, you expect a retracement to the 0.5, which is your 5-0 pattern, and you expect a bounce. Okay, if you're in the champions group anyway, you will know I woke up in the morning of the 27th. Okay, I woke up in the morning of the 27th and I said, I'm buying here for the 0.5 5-0 pattern. As I said, like, I had a vision in the night that this is going to play out and we're going to get a bounce. And we did. The bounce did come and we got a bounce in the end of 11%. Now say to yourself, okay, Daniel, so where have we topped out? What you know, we've hit the 0.5 perfectly, and we're getting underway off the 0.5 harmonic, 5-0 harmonic. Well, where's resistance? Well, how many times are you going to see this? Fib from the high, down to the low, you hit the 0.618 to the dollar, to the absolute dollar, and that's where you got the rejection. Where was your confluence on this? Okay, the confluence, as you all know, is, there you go, right there. We had the channel, okay, wicks above, coming back inside. That's obviously your rejection, 618 rejection, coming back inside, eventually losing the channel support. But yeah, that was 0.5 support to 618 resistance. Really nicely, isn't it? And then, as we all know, where we're still moving on in this, then we go from high to low, and obviously from this high to this low, we hit the 382 and got a rejection again. Okay, so then this is where it started getting tightening up, and today, if you're in the champions group, we're trading this today. You can see from the, you know, obviously we had that symmetrical triangle, fake out from the triangle, all going on with funding, which I'm going to explain that in the champions live stream. But obviously we had the funding, and I totally predicted this one as well. The funding, the drop just before funding, the pump literally 1 minute after funding occurred, and we come up to weekly. At this point, there was nothing to be bearish about. At this moment in time, right here, I'm telling you, there was no real need to be bearish. Okay, there wasn't. But it's the fact that then you start coming into bearish market structure again. And clearly then you can say the weekly is held. So we're holding up at the weekly at this point. Okay, so where does it get more bearish? As you'll know today, this was I was looking at, and remove this a second. Okay, and I'll just take off the volume so it's just not in the way. You can see this is today where we lose the exponential moving average support. Okay, so then from high to low, we hit the champions channel, rejection. High to low, hit the champions channel, rejection. Okay, then we're on to the monthly level. Okay, monthly backtest, resistance, down. Monthly backtest, resistance, down. Okay, that forms our low. Then we went from low, okay, so then we went from high to low. We hit the champions channel again and down, okay, and what happened again? From the high to the low, hit the champions channel again and down, okay. Then after all of this has gone on, we've obviously got a lot of winning trades. Specifically in this region is where I was shorting it today. Made some very nice trades shorting that, and then what we can see is eventually we're back above the exponential moving average, back outside of the channel, and we're getting some bullish market structure, at least on the lower term time frames here. So that was a nice day of trading from fibs, specifically in this region for me, because I was asleep during this. But yeah, there we go. What does that leave us with now? Well, very simply, I think we're range bound. Okay, you know, it's crazy, as I mentioned in a public video, so I don't want to spend too much time. But you get the moves down and you start seeing everybody, oh, here we go, it's going to 8,000. You get the moves up and you start seeing everybody going, oh, here we go, we're going to, you know, 13k. Ultimately, we're range bound here. So ultimately, we're just range bound, and you can see I've got this hourly level. You know, in the public update that I gave, well, not public, but the trading updates that I gave to players, contenders, champions, obviously I listed the hourly level as support 9,025. That clearly has held up today. So I think we're range bound ultimately, and I do foresee us, you know, going more sideways here for a while, as people essentially over leverage themselves. People are just getting chop, losing money. Obviously, we're in the group are doing quite well. I traded this very well. But ultimately, I imagine a lot of other type of traders are getting really wrecked, up and down. And if you cannot range trade, you're going to get wrecked. And that's not to say that people in the group are only winning money, because obviously not everybody follows me picture perfect. But this is just, be aware that if you don't like trading ranges, this is not something you should trade. I like trading ranges, so I enjoy trading this, and I trade it, you know, arguably very well, but I do still expect us to range bound. I don't think we're going to get a massive move to the up or downside, like you know relatively soon. I think we can easily range bound here a little bit more as people just get chopped up losing money. You know, and also what happens with the longer we range sideways, the more uncertain people get, and that uncertainty makes people come out of the market, okay, because they're uncertain of whether this is going up or down. When everybody starts getting uncertain, they'll come out of the market, and that's when you'll get the big move, be it to the upside or the downside. That's when you get the move as everybody withdraws from the market, because they've either got bored or they just become thinking, oh, I don't know where it's going next. And that happens to me at times, you know. You know, I'm not in every single move that happens. There are times where even I will say, well, this is very uncertain, it's a 50-50, as do a lot of other traders. Hence that's why you get these moves as people withdraw from the market. I'm lucky enough to be a good day trader, so I still get on a lot of moves in the day. But from a macro perspective, there are a lot of times where I've been 50-50 on the macro, and would have missed the move if I wasn't a day trader, you know. But that's what I believe is going to happen. We'll end up ranging more here as more people become undecisive, they leave the market, or they over leverage and just keep blowing their accounts in a range. It's crazy. But ultimately range bound between the hourly and the weekly at the moment. Okay, close below the hourly, and I do expect lower prices to around 8.6, the last area of consolidation. It could get ugly if we start losing 8.6, and you could start seeing these very much lower prices coming in. So 8.6 is an important support level for me. Okay, I don't really want to see that lost. If we just go from the overall low to high, that's coming in around 8.5, 8.3, 8.4. You start losing this, and I would become more bearish. I'm not bearish right now, so I'm not bearish right now. But we lose 9k. I'm expecting around a golden pocket. Okay, we've obviously got the futures gap fill, so let's just be aware of that. Around 6665, but ultimately, if we lose this, I'm expecting lower prices to come. But from a bullish perspective, which I'm leaning more bullish, would be that we have, you know, be nice to, this 5-0 pattern is kind of dragged on too long, but ultimately it gave a nice buy originally, didn't it? So managed to trade that one, but ultimately I'm expecting a range. I'm just expecting a range bound trading between the hourly and the weekly again. What you want to be aware of is if we get this move back up, if you swing failure pattern the weekly and we come up with a swing failure and start heading down, well, I would expect actually lower prices to come on the macro. So bullishly, you need to get above this and actually hold it and move up, and then you can very much expect, well, for myself, I'd be expecting back up to 10k. If you hold and close above 10k, which is obviously still important because it's the 618 of this still. So you manage to close above 10k. Oh yeah, I'd be expecting the highs to be taken out, and a much higher price is very, very bullish for me. But yeah, that's the main resistance to be aware of, 10k. But weekly, very, 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 very important in the midterm. As you can just see, it's clearly the resistance at the moment, and we've clearly got support down at the 9k level. So it's range bound trading until then. What's really nice about this is our weekly. Okay, if we just let's put on a range of this. So from our weekly resistance down to our hourly support, you know, if we're trading this as a range, let's put on our range. Okay, so how is this? The 0.5 is actually pretty nice, isn't it? If we just move this left, okay, we can actually see that the 0.5 has been support. Okay, what's the 2.5 like? Okay, the 2.5 not too great, but we can see a little bit of resistance and resistance here. If we look left, if I guess I just drag this all across the way of the range, okay, we can see the 2.5 actually has been pretty nice. The 0.5 is clearly very nice. Okay, and the 7.5 has also been very nice. Well, there we go. There's the range. So yeah, I would say that's a very well respected range. So let's trade the range until it breaks. Okay, obviously I'm leaning bullish, but ultimately I'll trade the range, and if we break down, I know where I'm wrong, and I know where to go into shorts. But ultimately I am bullish. Okay, but I would still trade this range until it breaks, you know. And this for me, the weekly and the hourly are very important levels. The monthly itself lining up with the 0.5, very nice. So yeah, that's my perspective on Bitcoin, and yeah, loving fibs. Yeah, literally Fibonacci is amazing. Like I also absolutely love fibs. Like I really, 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 really do. I do love them. Such a sexy. My main takeaway today is to use multiple fib pools for the confluence. Yeah, make sure you put on those fib pools for confluence. It's really, really powerful when you start doing that. Would two fib pools lining up but no other confluence be enough for you? Yes, it would. It would be. What I would really like to see is a horizontal in there as well. So horizontals are my number one. So I use horizontals over Fibonacci. So I much prefer to trade off a horizontal. Well, I don't want to say that's the wrong word. I value horizontals over Fibonacci. So for me, this weekly is stronger than a fib because my horizontal levels are my strongest levels. And I've shown you countless times where you hit these levels to the dollar, to the sat, and it will reverse. This is across stocks. This is across Forex. This is across cryptocurrency. My horizontal levels are amazing. Like, I want to say they're amazing. Like, there's so many times they've worked really well. So I do give more importance to horizontal. Thus, I would always want to see really Fibonacci with a horizontal. That would be like just icing on the cake. I will take Fibonacci Confluence 2 on their own, but I would really love to see a horizontal in there. That for me is very strong. I will take two fibs on their own though. To answer your question, I will take two fibs on their own, but might lower my risk position size, for example. But add a horizontal and I'll go full risk. But yeah, I do love horizontals. What I really like about your trading is that you make it so simple. Yeah, like this is also the thing. Like if I start, obviously I can go really complex and start confusing people. That's definitely not what I want. I don't want you to think that to make money in trading you have to have a complex system. That's actually not the right idea in my viewpoint. You want to keep it as simple as possible. You also want to try and keep it as systematic as possible. So you don't want to find yourself thinking, well, 10 setups, you take 10 different trades. You want to try and reach a level where you have systematic entries. For me, like if I see the Champions channel on a weekly, I take it 100% of the time, no questions asked. You want to reach a level where you're not thinking, do I take this one, do I not take this one, but you have more of a defined system. And for a system to work, it has to be simple. If you have 10 different components of the system, you're making it really complex. Fibs are really simple. So yeah, they're nice. I have a channel from the very top of the move to where we are now. We are at the very top of the channel with resistance, confluence, and monthly. I say channel, but in reality, it's a trend line respected as resistance. So let's see what you got here. I guess I can see what you're pulling. So you're pulling this one? No, you're pulling this one? I'm not too sure which trend line you're taking, but if you're on this trend line, then you could say we're still below that trend line. Obviously, that could be what you're looking at here. So I guess for this to break, you want to be breaking above, well, 240. Well, that's just our monthly level, isn't it? Really. So yeah, the monthly level for me is a very important level, and that if that's the trend line you're on about, then yeah, you want to break above the monthly, but I guess before you become a buyer, and then you'll buy 250 to a $250 rise sort of thing, or you could take shorts off a 250. Fantastic stream as always, Champions level for sure. Thank you everybody so much. I'm really glad that you've enjoyed tonight. Obviously it was just the beginnings of the core, sort of what I refer to the core of Fibonacci, giving you the important levels I trade, specifically giving you the 6-6, which I really don't think you're ever going to have seen anyone give you a 6-6 before. This is unique to me, I believe. I'm the one that done all the research and the statistics. You have to remember that most traders are also really lazy. So you ask yourself the question, this is a rhetorical question. Are you logging every single trade that you take? Are you taking statistics of the trades you take? Can you refer to a trade that you done 1 year ago and know why you're taking it? Can you, these are all important edges as well. So it's not just the analysis, but also the record keeping and the journaling for me are very important parts of trading. And most traders are too lazy to do this. So I found a 6-6 through hard work, I would say, not just randomly taking trades all the time and just thinking it's going to keep working. It's actually through data. But yeah, I found this myself and through hard work and record keeping. So I don't believe you're ever going to have seen that before. I never have. So yeah, that's obviously a nice bonus on top. So and you can see, I can post way more examples. Well, you see examples every single day in the Champions chat, but there's 3 different markets and respected on each. But yeah, that's it for the first part. Next week, I'm debating whether to do extensions or negative fibs next, but one or the other, and then obviously the next week. But yeah, I will catch you all on, well, if you're a champion, I'll see you on Sunday's chat where we'll do some more live trading. So yeah, I'll see you on Sunday for the live trades, which was very nice. Hopefully we'll get another nice week. So I'll see you on Sunday if you're a champion. Well, I guess I'll see you in the group chat if you're a champion, just over on Discord. So I'll catch you there, I'm sure, after this stream where we'll continue trading this. Or if you're a contender or a player watching this back later, I'll see you all in the next stream, which will be next Wednesday. Where we'll move on to the next step of Fibonacci. So yeah, thank you everybody so much. I really hope that you've enjoyed this one. Yeah, and we can continue like literally smashing this. It's been very well traded recently. Not to blow my own boat, but literally it has. So yeah, thanks again everybody. I'll catch you next week in next week's stream for the part 2 of Fibonacci. Thanks again once more for joining me tonight. Hope that you have thoroughly enjoyed this one and you are, beginning to see yourself improving as a trader. And I would say if this is your first live stream tonight, if you are a newer trader, today's day one, think of what's to come. Just think of what's to come. It's amazing, to be honest. I'm excited for you. So thanks everybody, and I'll catch you next week. That's me signing out. Cheers everybody. Thanks.